None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It's already starting off with a crazy day, huh?
Yeah.
Just as we got into overbought territory, went right to the extreme target. Market drops 20 handles, just like that. All the optimists that thought the Ukraine situation was over, maybe not. Supposedly, Ukraine has attacked a Russian convoy, armed one, so they say. That's going to make Putin happy.
That's certainly not going to help any tensions over there.
Yeah, so tough situation on that one for sure. Meanwhile, you can't tell the Ukraine away from the U.S., I guess, if you go to St. Louis, I guess. So you got, in our own backyard, we've got plenty of unrest going on here as well. Every report that has come out this week, virtually every report, I guess I better be careful with that, has missed as far as economic activity. I meant to look at some of the retailers and pay a little closer attention, but I know just about everybody was showing retail sales down. Everything that's out there does not necessarily promote, and it's kind of funny because the Fed guys, Fed followers are coming out and saying, well, the weakness means that the Fed won't take their foot off the pedal, and they're going to keep it on. So bad news is good news until about an hour ago.
Yeah.
So that it's funny how these markets go, and I for the last several years I've noticed that a lot of these extreme targets that I've talked about, it seems like we always go to the extreme. I always think we're going to go part way. That's a normal type retracement, and once again, I think we went right to from the decline that we had all the way from the lows at 1904 the other day. We actually rallied back all the way to a 61% retracement, and I guess I don't know what the rest of the day is going to look like. We're going to bring some charts up here in a minute. But it looks like they broke the back on this thing. That this little rally that's been going on all week, all of a sudden, is not too good. I think I was looking at commentary this morning. I think I forgot to mention something I had in my notes, so I guess we'll do it on the show. That's the beauty That's the beauty of having a show. So, Mitch, what was the stuff that came out this morning that we were looking at just a little bit ago?
Well, there was the Empire State Manufacturing Survey. The consensus that was expected was 20. It actually came in at 14.69, so that's a pretty big miss there. Production, month over month, manufacturing production was consensus was 0.3. The actual was 0.4%, so it was a slight beat there, not by much. Sentiment was another one that came in. The consensus on sentiment was 82.3. Actual was 79.2. So that's another pretty decent miss there. And then, of course, yesterday we had the new claims come in. Consensus was expecting 295,000. The actual was 311,000.
Right, yeah.
And as you had already mentioned, we had a bunch of retailers that we'll get into for the stock of the days come in that pretty much across the board missed on expectations.
Yeah, and so Does this mean the end of the world? No. I don't know. The Ukraine situation probably, what was it, World War One or something emulated from there, or maybe two as well. That this always seems to be the hot spot on the planet. These guys just can't get along, no matter what they're doing. So, but the bottom line is, this type of situation you really can't, I guess, predict. These are random kind of things that happen, but it's interesting that the randomness happens right at key technical levels, and I guess the configuration made it clear, at least when I was doing it last night, that we were really, really close to the end of this rally. And there's not a chance, and we're going to go through technicals in a minute, that 1904 won't be revisited before whatever is going to happen next. That's just going to be tested again. There's no way we're getting away from that. So I guess we don't have. You got anything else, Mitch?
No, let's dig into it.
All right, let's get going. So the first chart that I'm going to show you will tell you the whole story of the morning here. You can see the steep drop here. We are trading actually into new highs for this run. 6402, I think. 03 was the high, 1964, 02, 03. And now we're at 1945.88. So we're off just about 20 handles from there. You can see the sharp drop, and then we can go there. The interesting thing is the cycle came in initially here at the lows, and now we're seeing another. This is on a 1 minute graph I've got up here. So this cycle has hit here again. So I wanted to show exactly what's happened here, and if I go over to usually this is a 5 minute graph. I move this cycle. This thing should be right here. This was the initial cycle. Mitch, I realized when Mitch and I were talking right before the show came on, I thought, boy, that cycle moved. It was because I went to a 1 minute graph. So the 5 minute cycle came in right there, and so we're looking toward the end of the day. So if we do get into recovery mode, which it has recovered a fair amount, we're about 300 points off the lows here right now. We'll see how far we can recover, but we're a long ways from making new highs and probably getting a decent close. The number that I was talking about that I didn't mention on the commentary was usually I have a bullish bearish range. Maybe I did do it, but under 1944.50, which pretty. I don't know what the low of the day was. Could you look at that, Mitch, on the S&P? I don't have it right in front of me at the moment, but that a close under that level would be bearish, and would set the tone for at least a move down into the 20 handles again, around 32 to 25, 1925, and then from there we'd have to see what the configuration is to see if there's more to it. But make no mistake, when we talked about this before, 10,600 plus broken patterns in our system out of 18,000. There's a lot of patterns that, whether the market rallies back and bounces around from these points, they're broken trends, and when that happens, they just don't revive very, very easily. And you can always tell what the real direction of the market is when it takes 4 days to go up and 1 day to take it mostly back, when the big momentum is always in the direction of the trend. So we've seen over the last 2 weeks, maybe 3 weeks now, the same type of configuration where we're getting the downside for the same reason, which is the Ukraine. And I suspect now the dynamics of this situation will probably get much more interesting, and I suspect that there's not going to be a lot of folks looking to go long over the weekend.
Yeah, I bet going into the close, it'll be interesting because we have been seeing a lot of short covering going into the weekends past week or so, but yeah. I don't think that's going to happen today.
Yeah, it certainly doesn't look like it, does it?
Yeah, the low on today is 1941.50, and of course we're trading at 1947.15 right now.
Right.
So we have recovered quite a bit, and that is just below the extreme support for the day at 1944.50.
Yeah, and you can. I'm going to take Mitch back off screen here. So, but take a look at just the charts here. You can see that we bounced back to this one of these first fan lines that are here, and they just updated just a second ago as this 5-minute chart is updating. So we're seeing certainly some resistance, and the key levels are going to be way up here. So yeah, we're down eight handles. We were up almost 8 handles earlier. So complete reversal. I guess, we've seen this before where, I guess the dippers are out there, but they haven't been very, very powerful lately. And like I said, we were grinding up 0.5% here and there. We had worked all week long to get up 1% on the week. So I guess what's the numbers here right now? Let's take a look at, let's go to the cash markets here now and take a look at these numbers here real quick. Let me get over to the daily graph here. And the daily graph is showing us that we've got, we're minus 0.42. So we're still probably up close to about 0.5% on the week right now with this decline, but it certainly isn't what it once was, as they say. We really had not we didn't have a lot going. This pattern is setting up. The danger, which is what I want to talk about today, I guess this pattern certainly is has more danger than good in it. Maybe you were feeling like the market, everything's all better. It's not, and it's not going to get better for a while. Right now we've got the PPMs that I usually talk about. I'm going to bring up on the screen here. The PPMs are, let me get to the right number here. There we go. Been having trouble. There they are. PPMs are still slightly negative on the longer term. We've got PPM 1 is a positive 0.13, well below any type of trend in any phase. And then we've got PPM 2 and 3 are basically flat, minus 0.06 and 0.23. And then we've got the moving average, the 10-period moving average is 1934. So that is probably at least where the market's going to trade back down to 37 to the 31 levels. Today we've seen 41.50 in the spike in the excitement that we saw earlier. So we're still seeing some recovery, and I guess maybe folks are waiting for other news. But regardless of that, when you get a day like this, when it's broken, it's pretty tough to come all the way back. I guess anything's possible. Maybe a statement by Putin or something, and that it's okay that they shot our stuff up. I doubt that's going to happen.
He seems like a pretty nice guy. I don't think he'd mind too much.
Yeah, exactly. Yeah. Anyway. I'm going to say I'm not going to touch that. You're not going. You almost pulled me in. I'm not going there. Nice try. But yeah, so the patterns unfolding here. This I'm going to get the whiteboard out and talk a little bit about this, because I think this is a pattern. I'm going to draw this up both on the daily, the daily pattern, as well on the weekly. So what we get is, once we get this high, we come down. We did the initial move down to the 1904-05 level. Now we've done this rally, and typically the next one down was going to be where I drew this arrow onto, and that will typically be the next leg down. And there's some characteristics here. We haven't got the VPM Fibonacci projection tool to issue any downside targets yet, because they haven't been met. But when it does, the move is going to be roughly a 90-point move minimum. Just rounding this off, because we had a high from 91 down to 05, so 85 points off of this. This will put us down to the target that I talked about both in commentary on Monday, as well as the targets, the 1885 to 1865 on the downside. This would be perfect, depending on how we finish today. This will set the tone for that next move, at least the beginnings of this next move. And we're looking at maybe 8 to 12 sessions to get that done. The way things happen anymore, that could be 3 sessions. So just about two things have happened is that we go to extremes. I was talking about that earlier. And then also not only do we go to an extreme, but we also will, all the timelines are contracted as well. Otherwise, they're very compacted as far as 5 to 8 days really is 3. And if you're expecting 3 to 5 weeks in the pattern, it seems like it's been going a lot quicker and hitting the extremes at the same time. So everything is accelerated, I guess, in these markets as far as the reaction. And trust me, you could probably go on this 1885 number, 1865 numbers. Those are really easy to find even if you're almost an amateur technician. But the trick is, and one of the things that by using the PPMs and the other things that I have available, it tells a lot about how the characteristics of the rally is going to be and where the decision points are. So those have always helped me a lot to help determine that. And these things are also embedded into the VPM logic. So let's go and take a look at the weekly graphs real quick here as we go through the review. Weekly, let's see if I can expand this out a bit just so we can see this pattern. This pattern is even more evident on the weekly, and I'll draw this in for you so you can just point out some things. The PPMs you can see here are all below their first and second derivatives, which is a sign that there is a broken trend. Right now the PPM1 is 0.4. We're 0.225 and 0.227 on PPM 2 and 3, which is below trend level. And I'll bring those numbers up in a minute, but it looks like that around 1906 is where the 21-week moving average and the 40-week is down at that 18. I can see it here, 1872. So those are the type of things that you see where we will go down to these lower averages. Now, if you look back in this entire run that we've had, I'll just draw some arrows around this so we can see it. We've never been able to go through that 40 period moving average, and that 40-week moving average is very, very similar, and I've talked about this before, to the 200-day average. It's but we've never gotten below that. We spiked down, we spiked below. Just draw this up here while I'm doing it. We've seen some spikes below the 21 period, and in this case we just got down to it. My bet is that we're going to see this thing reverse down, and we're going to challenge for the first time this 40-week moving average / 200-day moving average number, and that'll certainly wake up even the staunchest bull that you can find. You're not going to, that's going to alarm them, and that'll give CNBC something to talk about for a day if that happens. Yeah.
And Bob, we're looking at 2013 and 2014 years right now, correct? That's the time span.
Yes.
Okay.
Yeah, that's roughly from March of 13 on. Yeah. So so we're seeing the breakdown in all of the PPMs. We're seeing that this is what I was talking about earlier. These trends have been broken. So let's go ahead. I don't think much has happened when we go and look at the monthly stuff. We're still 136, 147, and 1% on the PPM 1, 2, and 3. So I'm not going to be totally convinced that there's a total breakdown until this PPM 1 gets under 1, so 0.99 something. Then that'll be a sign. And what we'll see then is the convergence of these averages. I've talked about this several weeks ago, that typically when you get a long-term top, the first thing that happened, we've seen a slight slowing of the PPM1, which is the beginnings, but we need to see that decel quite a bit. And once again, I'll just take a look at this average. 1881.25 is the 10-month moving average. And it's very interesting in the sequence of the moving averages I've used in the analysis for more years than I'm willing to admit at the moment, close to 30 of them. the whole thing is that the 10/21/40, when you go on the daily, if you go to the weekly chart, the longest average on the daily is very similar to the shortest average on the weekly, and it goes the same way. So the 10 month moving average is very similar. It's within a few points of what the 40 week moving average is right now. So and this is a way to do this top down analysis that I've done for many years, is looking at where we are in that rollover, or where we are within the short, intermediate, and longer term trends. And right now, long term trends are still up. The downside, what we should see is this thing come down at least close, maybe even exceed, like I said, 1885, 1865, and then we see a little bounce from there. But on that bounce, while the market's rallying, momentum is bleeding quickly, and that could be the situation happen. We're sort of close. What is today? The 15th. So we're halfway through August. So it feels like the month's over already. I guess I guess it shouldn't feel that way, but it is. We're counting the days here in Scottsdale until actually it's been like at 100 or under 100 for so many days where we feel like spring is here or something. But the bottom line is once August is done and we get the first print of September, we should start to see some of these elements that I'm talking about right now start to happen. And it'd be interesting to see if we have a continuing liquidation tonight in the database. I'm anxious to see how many underlying stocks are continuing to deteriorate. We've sold just about all of the high yield stuff, right, Mitch? We've dumped that everywhere, yeah. Right? And it's funny because, bring Mitch back on, that has been I guess a point where a lot of folks are talking about, well, is it still risky now that it's declined? And there has been a slight bounce in some of those elements, and but it's still a lot of pressure on there. And one of the things, I was watching CNBC Europe a couple of nights ago, and somebody made a comment that was like one of those, I never thought of that, and it really made sense. But the reason why the treasuries have, well, we're going to talk about those here in a minute, the reason why the treasuries have been dropping is because if you're in Europe right now, the best quality bond you can find is the Bund. It's 1%. Why not buy the U.S. at 240, and it's equal quality? So a lot of cash from Europe that's looking for yield is coming to our treasuries, and that's where the demand's coming from. Makes sense to me. If you talk to just about any of these guys coming on Europe, they're also hiding in cash, and so somebody said, well, what currency do you own? And when you're going to cash, and it unanimously was you buy the dollar. So
best of the worst.
Yeah, and so we continue to see this cash flow here. Unfortunate part is that the benefits of the lower rates certainly aren't being seen in any of the retail numbers. And I made the comment a couple of weeks ago, I don't know if it was this Monday or I think it was last Monday, that when I went out, I had some errands to run and go out shopping. It was like barren. There was nobody out there. I mean, I went into a couple stores and they had, I went into Fry's Electronics. If you've ever been one of those, it's like the Walmart of electronics. And there in the computer area, there must have been 6 or 8 sales reps, and I was the only one that walked up to these people. I asked a question, and they directed me to another department, so they didn't even get any action. So it was pretty sad. And then the checkout lines there can be 40 and 50 deep, and they have like 20 lines or 30 lines that you can go to, and I was next in line. Matter of fact, I stood there for about 10 seconds. So I've never seen it on especially on a midday Sunday like that. It's usually pretty packed. So, but it appears that there's something going on, at least from a standpoint. I did go to the mall too, and it looked pretty slow. But anyway, so the retail side, let's face it, it's all about the retail consumer here in the U.S. We drive everything, and I think I did see one positive, that the auto, I think manufacturing was picking up, but I guess with all these recalls, someone's got to make the parts. I mean, what is it? GM's called back like 6 million cars or something. I forget the number. But so I guess somebody's got to make the replacement parts, right?
Yeah, I have a Pontiac Vibe from 2003, and I think I've gotten 2 or 3 recall notices within the last 6 months. So I just keep letting them stack up. I don't drive the car that much, but that's going to be stimulating a little bit of the economy there with that, as far as just getting those things fixed.
Yeah. Well, yeah, you're just you're saving GM money. Get down there.
I know.
Make them pay. Anyway, so let's go on to the treasuries here, and let's take a look at, because I think that's an interesting story, because that's why, think about this, if you're willing to take some risk on the treasuries, I guess on are you willing to buy the high yield? And the answer is no. I'd rather go safe right now because things are looking too scary. So that's where that flight to quality is coming, plus the European bid, and just about a bid from everywhere that wants quality. And we did, I think, 16 billion of the 30-year bonds yesterday. There was a big auction a whole day. There were several auctions, but the 30-year had a 2.6 to 1 cover, in the tail I think was 2 ticks. It was pretty positive for a 30-year mortgage. Didn't mean to do that. Hang on. And the whole thing that continues to happen here is circling around the geopolitical risk that's out there. You know, I mean, we don't even talk about Israel and Palestine anymore. I mean, it's off the table. I have no idea what's going on. I guess they're in a ceasefire or something, but you know that thing could change tomorrow too. So there's a lot of risk in the market right now, and sometimes Mitch, what was that you were talking about real quick before I go through the treasuries about the EFA trade or something? The EFA.
Well, and that's a nice little side note. Anytime that anybody has any questions, they can actually, on our Ustream page, they can send us a message through the social stream. And it's been a while since we've gotten one, at least through that method. And it was asking why it was that we sold EFA right after the dividend payout. And ever since then, that trade has just been getting better and better ever since we made it.
Yeah, and I've got VPM Market Mind on, which I have a meeting right after this. So I'm hoping that it's the final meeting before the release. I talk about over-promising, underperforming. It's just, I think we got the final element that we're going to finish today, and it should be fairly small. But this, we've actually, not only have we exited, we've actually went short here at 68.11 here. So
what trade system do you have pulled up? Right now it's optimized on the 3.2 system.
I'm not sure here. Let's take a look. It's on 3.2.
3.2, perfect. Yeah, we sold back on June 30th with a slight profit after the not counting the distribution that was paid out, and at 68.116 or 68.16, I should say.
Yeah, and I got 68.17 because we have a slightly different database. And what happened on this database, because I have the shorts turned on, it's actually reversed and went short there. So it's up $3 already on that. It's not a lot. It was at 5-7%. But the bottom line is this thing continues to be under pressure. And while I'm here, kind of said I was going to Treasury, so I'm not. I'm going to get Mitchell out of the way. But this is the EFA chart, and you know it's interesting because here we are going back toward the lows again, the same pattern. It upticks and it goes back down. Been looking for a point in time whether the U.S. market's going down faster than Europe, or we're not going up as fast, whatever seems to be the scenario. And these charts, the emerging versus the emerging seems to have the stronger pattern, leading a little more in there. That's the other thing we haven't really mentioned, but on the emerging market side, I mean, China is just not really faring well at all, and there's still talks of all kinds of talks of default risk and things in their property market and all that. But you have to realize that that economy runs under state capitalism, which is getting similar to what it is here.
I was going to say, what's the difference these days?
There's not a lot. And, those of you who came back when Hugh Hendry came out years ago from London to talk at our conference, he was talking about everybody starting Japanese. And I think I talked about it several weeks ago. I think we're all turning Chinese, which is the the two basic tools of state capitalism is the central bank and the government spending, which is pretty much exactly that model has been emulated. It's being emulated by all the Western nations now. And whether it works long term or not, I don't know. Maybe if you have 1.3 billion people, it works better than if you only have 300 million. I don't know. But okay, let's go ahead. Now that I've rambled on about that, let's go ahead and take a look at the treasuries here. And the treasury market is all the way down to 232 today, and going lower. I think I talked about this the other day. Let me bring up these projections here. But 227, and we're really close to that, is one of the low targets here. And then the extreme is 2.11 to 2, basically to 2%. So there are downward targets right now on interest rates, primarily on the 10-year, for this thing to continue to decline. I don't think this is going to equate over to a lot of upside for the high yield. Maybe at some point, maybe people will go back to the high yield, but even then, those trends have been broken, and the probabilities of getting price appreciation on that, I guess, and stability works if you can collect the yields and there's not a lot of downside. So there may be other reasons to buy them other than from a trend following standpoint if we can't get stability. But VPM is probably not going to jump in for a little bit from what I was able to see looking at that. So let's see here. We're half past the hour. That's the other market that has been moving around a little bit is our friends over in gold, right?
Yep.
Are we getting out of the hole on this stuff yet?
Let me see where we're at right now in 2.0 on this.
So we're in at looks like 1262 on the GLD. What are you showing there, Mitch?
Yeah, I'm pulling up right now. Bear with me 1 second. It's just taking a little bit longer to load right now.
Yeah, Mitch doesn't even want to talk about his day yesterday. The technological crash nightmare.
Yeah,
a whole day.
Say the least.
One of those days where you spend the whole day trying to get just the stuff that's supposed to just working. It's pretty frustrating.
All right, so we got in on this on September 3rd, 2013. So we're approaching the 1 year mark on this. We got in at 135.43. So we're still at a loss. We're at a loss right now of 7 3/4. So 7.827.
Yeah, so it just keeps going sideways. We've talked about this trade for a while, and
yeah, it keeps bouncing around in a pretty narrow range.
Yeah, and I still have expectations to see 14.5 plus, maybe 1,500 on this thing, but it certainly, yeah, it just can't get out of its own way. It's like, it's interesting with all of this geopolitical risk. Supposedly, gold is your answer, and that's not the case. One meeting, maybe when we get back into out of summertime blues here, maybe one meeting we're gonna maybe bring in and talk about bitcoins, because eBay is now getting ready to set up a payment system for bitcoins, and I've kicked around. I actually have a Bitcoin wallet and some things going on, but haven't really traded them much. But it's getting more and more traction, and it's interesting. As much controversy has been around, I don't think I'd stick lots and lots of money in there. But anyway, we'll cover it anyway because it's an interesting thing. Maybe the markets will get really boring like we should have already done that a few weeks ago, I guess, Mitch. we missed that window when it was just when we had ranges of 6.5 points per day.
Yeah, something tiny.
Yeah, and there was nothing going on, and we were complaining about nothing to do. We could have brought in Bitcoin, so hindsight's wonderful. But as far as the treasuries go, as far as gold goes, nothing really there. We're just not getting a lot of attraction on anything other than treasuries. And the market, is we're only down 687, so we're continuing to rally back. So let's go ahead and go up full screen here on this, and let's go ahead and talk about some of the stocks of the day that we've targeted and see how that goes.
All right, let's. What trade system do you have pulled up right now? 3.2?
Yeah.
All right, let's start with Monster then. MNST. This is a trade that we've had on for quite some time now. Today, I believe it was, they just announced a new partnership with Coke, and that is doing pretty good for the stock, as you can see.
Yeah, that's a nice one. Yeah, just
So,
only up
so
27%.
yeah. So I guess
Today.
it works. Yeah, today. We got in at 57.96.
Nice.
So let's see where we're at right now on this.
Yeah, and one of the things I'm looking forward to, we get out of the summer here, this last month of summer, that we're going to start back with our process warriors, and where we cover some of these other elements and how these trading systems work, and how they get into screening, stock screening, and all that again. I've kind of missed talking about some of that stuff, but it's just got so quiet and so many emails that you guys are out golfing and doing stuff. We just decided to cut it back to the two shows a week. But yeah, this is a pretty impressive chart. This is even more interesting. Let me bring up the whiteboard real quick and just go to full screen so we can just focus on this stock for a second. But the interesting thing here is that it appears this breakout is the beginning of another leg up. So let me show you what I'm talking about. The PPMs over here are just breaking out on through their moving averages. This is one of the most bullish formations on the PPMs that ever come out. And a lot of times what you'll see, and I draw an arrow through this action on Monster here. We've had calls over the years, gee, Monsters went down, how come we haven't sold it? And here it is again. Remember that 40-week moving average? We just held this average, and the patterns, the longer-term patterns, stayed in sync with the trend, and prices remained above that. And all of a sudden, this isn't normally what happens. You get a 27% gain in one day, but this pattern is one where it goes up, it consolidates, and then there's another leg. And if you're counting these things, this is probably wave 3, which is supposed to be the strongest wave, and it's a pretty good way to start out, 27% gain. But this pattern should evolve. I don't have any Fibonacci projections out of this pattern. It's exceeded what was there. There was some patterns just right here. Looks like 71 or something here, which it blew right through that this morning with the news. But yeah, so so the patterns that are coming out of this, because of these PPMs expanding right now, it tells me that the trend, and all we have to do to make this happen for the next couple of weeks, stay between 27, 29, maybe 26. You stay 90. What am I saying? That's the percent. But between let's see here, we're looking at 91. You stay above 85, 80 for the next few weeks and trade in a range. This momentum is just going to continue to increase, and we're going to get into that expansion mode on the trend. Right now, PPM 1 is 0.01, 0.04 negative, and then 0.48. So the long-term average that held has got well over the trend mode, and this is one of the reasons why VPM will stay in the trade. I remember way back when in 2010 or something, we kept hanging on to EFA, and everybody wanted us to sell it, and then we found out why we continued to hang on to it, because it was a very similar pattern. It declined down into the averages, and then we saw the market. Then we saw this market completely explode out of this pattern. Very, very common pattern that happens. They're not always just above I'm drawing an arrow above my head here. They're not always like this big long trend that went from 2011 all the way into April 04. And typically there's a 12 to 16 month trend that is really targeted by VPM when you get these trends. If you start to look at how long they've been, I'm sure, Mitch, can you see what the duration expectation is on Monster here on VPM? And maybe we could bring VPM up real quick. Let's do that for fun. So let's go ahead and see what we've got here real quick. Of course, I bet you 101 I'm not logged in. Nope.
Probably not.
No, exactly. I was right. Could you do that for me, Mitch? While we're
Yeah, I'm pulling it up on my end. Bear with me 1 second.
No, I mean log in. Okay. Never
Oh,
mind.
I'm sorry.
That's all right. Communication is everything, right?
Yeah, there you go.
So what I want to look here, and I don't have the right
There you go.
right login, but now I do. Hopefully, we'll see. There we go. Yeah. So if we go back to must be one of those. No, it's not one of those Fridays. So Mitch, would you log us in there? So anyway, what happens on these patterns is they go sideways. There's a lot of these examples out there that that we will go in and see this elongated pattern and then explosion to the upside. So yeah, we're waiting for. There we go. All right. So if we go to research, now it's been so long I forgot the symbol even. MS.
MNST.
ST, right.
There you go.
So when we look at this thing from a trade profile standpoint, you'll see exactly what we're talking about here. Is the expectation on a trade profile is for a holding into right into the last day of the year. It looks like, oddly enough, 12/31. And so we're looking at projected duration. Yeah, here we go, 12/14, 11/18. That's exactly. So into November 18th, we will hit the expected returns. The good news, I guess, what are we currently at? We got a long ways to go to get to the projected profit here. It's quite a bit. Let me just bring this a little bit bigger so we can. It's kind of hard to see. I can hardly see it. You probably can't either. But the projected profit is for 188. So 225% is what we normally made on this stock. But that would be expectation of the stock going to 188, 225%. So that's maybe a little far-fetched there. But we'll see. So let's go on to the next stock, Mitch.
All right. Next one on the list is LinkedIn, LNKD. And they recently beat earnings estimate. And I believe we're currently flat this position on a 3.2 weekly.
Yeah. Yeah, and with TradeStation, there's not enough data here. This stock hasn't been around
that's right.
to trade this on this particular model. But we can go over to over here. Was it LN what?
LNKD.
KD. Yeah, okay. I'll never be able to be on Jim Cramer's show, will I? Yeah, so you can see here that this thing has exploded out of this pattern, and with this has got 3.2 on it. So 3.2 is not interested in this. My bet is if we go over to 1.2, we probably have a trade on there. We do. So two things, and this is a quick lesson on VPM, is if you're expecting a stock like this that has declined from one of these high momentum from 250 to 140, actually 250 plus to one minus, just a bit under 150. If you're looking for a V bottom, one of the trades that I used to miss out on was this V bottom. I have more of a tendency to be a 3-2 trader before I had this logic, and looking for the right shoulder. This is a very small right shoulder. It used to frustrate me. I knew the stock or the whatever it was I was trading had bottomed, and I was looking to buy it, but I was waiting for the classic kind of cup and handle type formation, which is what VPM 3.2 really waits for. And we've seen, this one has a nice trade, and we've seen other cases like we can go through other stocks that have actually, like Netflix had a 1-2 trade that bought up after this thing ran up like this, and then it had a loss, and then it had like a 400% plus gain after that. So 1-2, it comes down to if you're screening for this stock, it comes up on your screen. I would wait for a 3-2 buy. Obviously, we're already up 25% here. Probably don't want to come in here on 1-2 if you don't already own it. But if you were watching this thing decline and you want to catch a turn and you're looking for kind of a shorter term trade, this is certainly a way to do it, is to stick 1-2 on it, even if 3-2 is, and then you can rotate out of there. My bet is if we go to like a daily 1-2, be interesting. Yeah, see, it bought that little breakout. It bought it off the lows here, and then we did another trade, and now it's up about the same, interesting enough, as the weekly. It's up 25%. So it looks like they pretty much bought that weekly breakout at the same point in time. The difference is how this chart and how this model is going to respond to this trend once it peters out. So back to TradeStation and the next stock.
Next stock, well, we talked about retailers, so let's pull up one of them. How about Macy's? Ticker is M, and it's currently optimized on the 1.2 system.
Okay, so I'll have to switch that one over a bit. So let's have to do 2 steps here on at least the way I'm doing it. And I'm also, let's see here. Okay, good. It looks like, we just sold out of this thing a few weeks ago, is that right?
Yeah, I'm just double checking that on my end right now.
Here, I'll just do it right here, right on live on screen. So Macy's is what?
Yeah, we sold out of it on July 28th, so just the end of last month, made a nice 12.5% gain.
Yeah, for some reason, there it is. So Macy's no position here. And I'm in daily searches. That's always nice. So we're going to try this again. And you said it's on 1-2, right?
Correct.
Okay. Yeah, so here we are. You can see the sale out of this thing. So we had a nice long trade here. And I'm telling you this, when you start to look at a lot of these charts, they all are looking just like this one. I'll blow this up just a touch here. That's a little more than what I was hoping for there. But if you look at this chart here, this is how all these trends are looking. These things are all rolling over. There are thousands of these.
Bob, you have the VPM database there as opposed to Macy's.
Oh, I do.
Oh, although we did handle the database pretty good too.
Yeah, there you go. Thanks. Thought I clicked on it. Yeah, there we go. See, I'm on the weekly 3-2 here. Okay. So where's it at right now? Okay.
Yeah, we are flat the position right now.
Yeah.
We sold out of it at the end of last month.
Right. Okay. So I was looking at the wrong database, but anyway, thanks for the help there, Mitchell. Appreciate it. But yeah, so we're looking at this trade here, and then Macy's got hammered this week, though, right?
Yeah, their forward-looking guidance got revised downwards. I think they were expecting it to go to 2.5%, and now it's dropped down to 2.4%.
Yeah, now I've got it on TradeStation. We can see this week. VPM won't update that chart until tonight. So what you're going to see, matter of fact, there should be a couple of things that happen when you bring it up in VPM. It'll recognize that there was a reversal pattern that had occurred. You'll see that early in the week, I guess before the earnings came out, the stock had moved up into a new high, and now it's trading at or below. Let's see, we sold it at 57. It's right back to where we sold it at, even though there for a moment it built some anxiety if you sold out of it. Thought, oh no. But in hindsight, everything's okay when you get a big reversal like this out of a pattern. But these are the kind of trends that we're seeing a lot of, where you're getting these failures and all that's happening the same. So so that will give you a little bit of perspective, at least from when you're seeing these exits go. You see the PPMs are pretty flat here, although the long-term average, which is up, the PPM 3 is at 0.64. And let me bring this up here so we can see this. The long-term average is 56.31, so we're trading just above that number. We're going to need to break through that with a 0.64. My bet is we probably hover along this line for at least a little bit before we start to get out of there. Okay, next.
All right, next one I have on the list is JWN for Nordstrom's. And that's also on the 1.2 weekly system.
Okay.
And we are currently long this security.
Okay. Even though it's not having a fun day today.
It is not.
So did they miss on their earnings? Is that what happened?
Yeah, I'm pulling up the data on them right now.
Okay. Yeah, so another one of these reversal patterns, but once again, we get 0.27, 0.62, and 0.39 on the PPM 1, 2, and 3. So everything's in trend mode. We have traded down to the, I'll bring this up, the values here. We have traded down toward the support. We're 65.93. We're just below the medium average, the 21 period moving average at 66.18, and then 63.57 is the 40/200 day roughly, and that's rising also at trend levels. So pretty good shot that this thing would recover from there and remain above this 21. So you might see a little bounce back on this stock later today. We can actually go in and say, what does this thing look like on an intraday basis here? And you can see the gap down that we've seen right here. And that is, yeah, it's going to take several days for this thing to recover. We can move back up a $1.50 or so off of these lows, or maybe $1, but it's still going to take a while for it to heal. And these are things from a technical standpoint that happens is once these things break down, you've got to get in position for this thing to consolidate down here. Even if it was the low and it doesn't go lower, it's going to take multiple days. This is literally a 60-minute graph, so each bar is 1 hour. So on a daily, you can see the same kind of configuration where it's just been real choppy in here in this sideways range.
Yeah, so with Nordstrom in particular, they had announced the buyout of the company called Trunk Club. I'm not sure if you're familiar with the service, Bob, but it's a company that what you could do is you could order, I guess you'd send them a picture of yourself and some measurements, and what they do is they send you a trunk of clothing that they think would be good for you. And if you want to keep anything, they bill you for it, and you send everything else back. So it's an interesting service model, and so they announced that they're going to buy this company for $350 million. And I'd say this is certainly a new way of approaching the retail.
Well, you're saying it's virtual wife.
Well, yeah, it's not secret shopper, but it's your own personal shopper. Yeah, but and they've been targeting towards guys because how many guys like to go out and buy clothes? I know I certainly don't.
I don't mind. Mitch doesn't. That's why he has one white shirt and one sweater. We always give him a hard time, but yeah, I don't mind. I like I had the wife that bought me everything once, and I hated it. So I always had all these clothes. So I realized I better buy my stuff. But yeah, so that's an interesting concept, though. But that's basically what it is.
Yeah.
So anyway, but these patterns are, same thing, and this may be what it looks like on the what was the stock that just spiked up that we looked at? I've been through so many where we were just spiked up. Oh, Monster. Yeah. So yeah. Monster may end up looking just like this one, where you see it shoots up and then goes sideways into these ranges, and we'll have to see how that pattern goes out. So a good part of that Monster trade maybe could be done, but relative to some of the other stuff that's out there, I don't see that probably playing out. There seems to be more upside on the Monster trade anyway.
Yeah.
Okay.
Sticking with retailers, next one on the list is the classic whipping boy, JCP. Obviously, they had a really rough time last year. I think they're still positive on the year for this year. And I'm just pulling it up right now. In this one, we are optimized on the 3.2 system. So sorry to bounce you back around.
No problem.
But we got in this trade back in May 19th at 965. Currently, it's trading at 940. So we're operating at a slight loss on this.
Right. Yeah, and this stock has been a disaster, and it's right up there with with Sears and was it Kmart?
Yeah.
When's the last time you seen a Kmart? I haven't seen a Kmart in years. I think they're all gone.
There is one up in my neck of the woods, but no one ever goes there.
Yeah, that's funny. Yeah, so yeah, who was it? The hedge fund guy that bought that. But anyway, did really good because he sold when they took over Kmart and did all that stuff, they sold all the real estate to Home Depot and all these big box stores that needed new locations. It was a great real estate sale. So after that was done, it's all been trying to manage a junk business that both on Sears and Kmart are both just really bad retail properties, as it turns out.
Yeah.
So, but this pattern is one of those basing patterns, 0.42, 0.36, 0.37 on the PPM. So all in trend mode. So this one's probably not going away anytime soon. Guess if I do, it was a JCP, right?
Yep.
We look at it from a viewpoint on a trade profile standpoint. I'll make this a little smaller. I had this thing so blown up here a minute ago. You can see this stock has just been terrible. On a trade profile standpoint, though, we're looking at 62 days of 195 expectations for the stock to go to about 1270 with a range of 1270 to 1570. And looking at that basing pattern, that's probably a minimum. This is the kind of pattern, if you see these are really, really good patterns. And this is a 3-2. So this type of pattern on a 3-2 where it's went down and you see a stock that's just, 45 to 5? What is that, 85% of the value or something? You see it basing here. This is probably at least a tradable stock. If you, I know a lot of you have all kinds of ideas. So if you're looking for distressed situations, if you use 3-2, we'll find usually it will be enough consolidation there for you to play these things and to get to work off a base. So typically, from a technical viewpoint, when you're looking at a base like this one has, it builds just that. You have a place to play off of. So if we get above that 10, so $10 to $15 would only be moving up to the previous level from it where it once was. So it wouldn't be a non-realistic expectation there at all. And if you looked at from 45 to 85, 50% is put you up in the $20 to $25 range. So there could be a bigger trade in this. Maybe their turnaround strategy. I'm not sure what it is, but maybe it'll work.
Yeah, we'll see. I know that at one time they were talking about doing the store within a store concept, much like not Home Depot. Best Buy has tried.
Yeah.
Where you have like the Apple store, the Samsung
Right.
store within it. So
Yeah, and that worked for about 6 months at Best Buy.
not very long, yeah.
And ultimately, Best Buy gets back to where they always were, is terrible service, and their employees could care less, and they hate their job. So that's a tough business model to run. Anyway, so in the final comments, we'll go back. The market has recovered a fair amount. We're at 1949.82, down 586. So let's go over, take a couple looks. So what's interesting, though, as this goes toward the end of the session, so I always try to do how we're going to end the day. Looks like we're going to hit, in about an hour and a half, we should hit a high point on the recovery, and we'll see whether this thing retraces down, and whether we were talking about earlier, whether or not this pattern is going to, no one wants to be in for the weekend, whether there's some liquidation coming into the close. If we look at a really short-term viewpoint here, we go to the futures and the 1 minute graph here. I'm going to change this for a second, just go to a 5 minutes and get a little better position. You can see here what we've done here for the session is just traded through, rebounded back up to a previous level where before it broke down to the final low. So there's going to be some resistance here. One of the things over here, I'm in the way, so how much time I got? I get 30 seconds, so I'll talk about this for a second. When you're on a real-time mode here, you'll see there's a cluster. There's quite a few. There's probably 250,000 futures contracts have traded in this cluster between 4 40, let's call it 1925 to the up to about 1940, or 1945, 25 to about 1947, 50. So about a 200-point range is a ton of value, a ton of trades being done, and they've got the value point of the day is at 44.50. We're 2 ticks off of that. So I suspect that this market doesn't go much, and if we do recover a little more, we'll probably hit a high coming in the last hour, and then we will get the sell-off. So anyway, it is Friday, and one of the things that we always like to do is set up some expectations. So I think we're going to see further liquidation in the VPM database. We're at 41.5% roughly bullish percent, triggered through our 42% range that we always look for. And I suspect this thing is on its way ultimately to probably in the 20 percentile range, which means 80% of the stocks in the database will have broken their trends by the time this thing's done. And so these broken trends, the 10,000, I think it was 10,680. I think I talked about that on Monday. That number stuck in my head. So there's a lot of broken patterns. I suspect there were more this week, and maybe some of them being generated as we speak. So anyway, folks, we will be back on Monday. So have a great weekend, and enjoy the final weeks of summer before we all have to get back to work. Right, Mitch?
That's right.
All right, folks. Thanks again. We'll talk to you on Monday.